Welcome back to another week of the latest crypto market action and top crypto swing trade setups. We hope you had a fantastic Mother's Day weekend. Let's take a look at the market. Diving in with Bitcoin, we pointed out to you in last week's videos that the key support levels to watch were the lows of late April, which you can see here just below the 27,000 level and circled in yellow. And actually last week on May 12th, we actually had an undercut of that level. And we formed a bullish reversal candle. You can see the long wick here on the candlestick. That's called a bullish reversal pattern. And this is your classic undercut. An undercut is a scenario when a prior level of support is violated, an obvious level of support like a prior low. But then within 1 or 2 days, sometimes the same day, the price reverses back up above that support level. Undercuts are bullish because they have the effect of running stops just below the support level. So that absorbs overhead supply and it makes it easier for the stock to move higher when the buyers step in again. So it is positive that we had a undercut and found a bit of support at the prior lows from late April in Bitcoin. Now, it took about 2 days till we got any traction. We consolidated near the highs for over the weekend. And then on Mother's Day, yesterday, we started to rally. And actually just today, we pushed back above the high of that reversal candle, which is important. We'll want to keep an eye on volume today. We'll want to see increasing volume above the prior day. And so far, we're on track based on the volume. Now, the only issue we have is that we do have a bounce going in the market, but how long will the bounce last is the real question, because we have a lot of resistance now that was formerly acting as support. Most importantly, right now, we have the 10-day moving average. And you can see here that earlier today, we actually probed above that 10-day moving average, the green line, but we currently are back below it. So again, the 10-day moving average doing its thing as a short-term resistance level. It was formerly support, but now we're below these moving averages. So the 10 and the 20, the blue line, and the 50, the red line, are all now acting as overhead resistance levels. So what we're viewing this bounce as is a potential tradable opportunity for a quick bounce, for some potential swing trade entries. And in the Morpheus Crypto portfolio, we actually now have a couple new entries. But we do want to be proactive at taking profits and trailing tighter stops and taking profits in the strength because we have overhead resistance. And what we're going to be paying close attention to is, do we rally up and stall, or do we rally up and consolidate? Right now, we're at a pivotal point in the market, and whether or not we're able to overcome resistance of these moving averages is going to tell us a lot about the market's next move. But until the market proves otherwise, we must assume that these moving averages will provide resistance, and we'll want to be cautious about taking profits into resistance levels in individual altcoins as well. So in the coming days, keep an eye on these resistance levels of the 10, 20, and 50-day moving averages. We got the 10-day MA at 27,500, and then the 28,200 to 28,500 area is the 20 and 50-day moving averages, which should be more significant, and a potential point to take profits on anything you're trading the bounce with. Now, if we head back down, keep an eye on key support around 26,900, which is the horizontal price support of the prior lows from late April that would need to hold. So keep an eye on those key levels in the coming days to help you guide your trading decisions. Now, let's take a look at Ethereum as a proxy for the altcoin market's health. The daily chart of Ethereum is a similar situation to Bitcoin. Just like with Bitcoin, we undercut the lows from late April, formed a bullish reversal candle, and actually Ethereum started showing a bit of relative strength to Bitcoin. Notice how it actually closed with the green bar and back above the range, showing a little more strength and holding above that prior low for the past several days. And just like Bitcoin, seeing a bit of a rally today, but backing off and stalling a bit due to resistance of the 10-day moving average. Key levels to watch on Ethereum in the coming days is 1832, and then we've got 1862 to 1884, the 20 and 50-day moving averages. As for support, today's low needs to hold, which is right around the 1782 level. A move back below that level could result in a test of the prior lows and potentially a breakdown to lower lows. We are indeed seeing some encouraging price action in a handful of altcoins today. First on our list is GRT. GRT is a former relative strength leader and hot player in the AI sector. And you can see that last week we actually bounced off the prior lows from March, which was a clear support level. And the buyers stepped in to hold that support level. And after trading in a tight sideways range for several days, now today, the price has busted through the 10-day moving average, blown through it, and actually now going through the 20-day moving average as well on increasing volume. So that's encouraging price action that we're seeing here in GRT. Now, the issue, of course, we have the 50-day moving average just above, so it's not necessarily a good risk reward for a swing trade entry here. Trades like this would be more of a intraday kind of trade where you'd look to buy a pullback, perhaps to the 50 MA on the hourly chart, and then sell into strength. But in terms of the types of swing trade setups we look for, we generally want to see a better risk reward than what we've got in GRT. But nevertheless, it is encouraging to see this type of price action in the market. Let's see what else is on our radar. Next up is AGIX. Now, AGIX actually is another member of the AI sector. We like the fundamentals in this one. It's a solid play, and it was definitely a relative strength leader in the last bull run. So we've been keeping an eye on AGIX for a potential tradable bounce on the first bounce in the market. Now, there's a lot of overhead resistance, and it's in a downtrend like many cryptos right now. So it's not our typical relative strength play we would be looking to enter. However, we did enter this earlier today as a potential bounce play. One of the things we liked the most was the increasing volume, which is already on track to be a very strong volume day. Now, we do have resistance of the 20-day moving average, but that's about 10% overhead. And then if we can power through that, then we've got a bit of room to run till we run into the 50-day moving average. If we zoom into the 4-hour chart, you'll notice that there is a short-term bottoming pattern that's formed earlier over the past several days, which is kind of like an inverse head and shoulder type pattern. And when we moved above that level, then that was our entry point. And again, noticing the increasing volume. Now, both GRT and AGIX are showing intraday relative strength and bullish price action, but keep in mind they're bouncing off the lows. So on our relative strength watch list, we look for cryptos that are still above their moving averages. And one play that's on our relative strength watch list, one of the only two that are on our list right now, is EDU. And EDU is actually holding above its 10-day moving average. It's a recent ICO, so there's not a lot of prior price action. And we're holding above the 10-day moving average. And we recently bought the pullback in our portfolio. We bought right around the 10-day moving average at $1.13 area. And now we're consolidating near the prior highs, swing highs. So it's a lot of relative strength in EDU. And with a continued bid in the overall market, we expect to see higher highs being set in EDU, which is actually currently showing a 12% gain in our portfolio since entry. RNDR is the other crypto on our relative strength watch list. And you can see here that it bounced off its 50-day moving average last week, which is an important signal. And it's actually a sign of relative strength on the daily time frame. If the price can push above the high of the day, then we'll be back above the 10-day moving average, and we could see the resumption of the dominant uptrend in RNDR. Last on our list is SXP, which we've highlighted in our past several videos. SXP is a former relative strength leader, which had a 400% rally in just a 1-week period back in April. Now, currently, it's at a 0.786% Fibonacci retracement from the moves off the highs, and it's in a tight trading range. The price action is just about to test the downtrend line from the highs, which notice has perfectly converged with the 10-day moving average. So that's right around 0.4485. And if we see a move above the 0.4485 level, if the volume confirms, we see an increase in volume, then we could see a nice tradable bounce in SXP, at least up to the 20-day moving average, and depending on momentum, possibly more. We hope you enjoyed today's Morpheus Crypto video, and we'll see you back here in the next video. Remember to trade what you see, not what you think.